I truly believe the more time we spend on digital, the stronger will the NFTs be. So my fundamental question here for every single banker who is listening to this is, who do you think is really accelerating digitalization? Is it your chief innovation officer? Is it your CEO? Or is it COVID-19?
Dusan Stojanovic, good to meet you again, my good friend. And it's been a long time since we had a discussion of any kind. Mr. Serial Entrepreneur, founder of True Global Ventures. I think you're running into your third fund right now, or is it your fourth fund? And doing very, very well. How has things been with you?
Yeah, thanks, Emmanuel. Yeah, it's good to talk again. It was a while ago, and yes, you're right. It is already our fourth one, so time runs quickly. And yes, life right now is actually pretty good.
You know, every time I catch up with you, the world is changing and lots of new things happening. The conversation I would like to have with you today is on Animoca, your latest investment, 8888888. That's a nice number. Basically, that's a very good number that you've raised for Animoca, which is on the back of its business in supporting non-fungible tokens, which is all of the rage at the moment. Why don't you start by telling me what you're up to with Animoca?
Well, first of all, I think we should, congratulate Yatsu, who is the founder and chairman, together with Robbie Young for the 800 whatever, eight numbers, $1 million raise, and what they've achieved, especially in terms of educating the whole world since roughly 2017 and 18 what the non-fungible token is. So in those days, 2017 and 18, if you remember, there was something called CryptoKitties. Basically, a lot of people had made some money on Bitcoin, Ethereum, and wanted to buy unique cats. That's why it's called CryptoKitties. So you could buy basically a unique cat. And Ethereum at the time got congested because there was a lot of people who wanted to buy this, and gas fees went up. And then actually it kind of faded away. Animoca and Yap and all the others in the team, we were stubborn as their investors. And we believe that would actually really change the world way more than the internet and mobile has. So basically the team there has spent enormous amounts of time on educating the whole world on what is non-fungible token. We didn't even use the word non-fungible token until recently. But in those days, we tried to explain that the non-fungible token is, a piece of land in a game that you can buy and that you own, and that you can build something on, and then you can play the game. And at some stage you can sell, everything you built in your second life or in your game, and like basically exit the game and get some money for that. And it took ages to basically educate. There were a couple of milestones in that company's life. Number one was that they got the CryptoKitties license for China. Probably that Dapper Labs, which is behind NBA Top Shot, were the original guys from Vancouver who actually created CryptoKitties. Animoca got the license in China, and then there was a big breakthrough in May 2009. The first Formula One licensed NFT was sold for $108,000. In May 2019, that was huge. We couldn't believe our eyes that somebody would pay $108,000 for basically a digitalized Formula One car that for us you couldn't basically use but only brag about. And the guy who bought it in May 2019 is the same person who bought Beeple for 69.3 million in the digital art that most people have heard in the world now. But that was kind of the breakthrough, I would say, for Animoca. And after that, there's been a lot of things that they've done since May 2019. But step by step, they have gone into one of the top global players in NFTs, and now have about 350 people across the world based out of Hong Kong, a big development team in Argentina. But they also have very strong presence both in New York and San Francisco in the US, where they have acquired NFT collectible companies last year. So they are pretty strong across the world, both when it comes to sports NFTs and when it comes to gaming NFTs.
So Animoca is not a platform; it's actually an owner of NFT assets. Is that what it is, or would you like to correct me on that?
Yeah. So Animoca is a lot of things, right? So they have really played an important play in the ecosystem. That they are the owner and not the marketplace, but some of the companies that they actually have are also marketplaces. And they have also invested 5 years ago in OpenSea, which is, the #1 marketplace when it comes to NFTs globally. When new things arrive and when new ecosystems are built, it's a little bit difficult to kind of say clearly who is doing what in the ecosystem. And I think one thing that Yat has done extremely well with Animoca is really to make sure that he's part of the whole ecosystem of NFTs, no matter if it's his own 100% owned subsidiaries or marketplaces.
Yeah, I'm doing this conversation with you for the benefit of old-fashioned people, right? And the question they would have is for someone to put, or some investors to put $88 million on the table. We look at the balance sheet and say, what does it hold at the moment? It looks to me like Animoca has got real assets, although they are, virtual assets. But you have. Your original assets were games, wasn't it? It wasn't the NFTs.
Yes, originally, like you said, it started as a gaming company. Actually, even before 2017, it was basically a mobile game for kids. And actually, it got kicked out for many different reasons from Apple Store in terms of their positioning there. And then the founders were thinking, how can they turn around this company and really position it for the future? And yes, you're right. They have some real assets. These assets are digital assets, and they are definitely real because people buy and sell them and own them long-term, short-term. So it is not, trading is not the main driver, but real assets.
Tell us a little bit about the tokens that Animoca owns or distributes. You've got Ref and you've got Sand.
So Rev is exactly what we talked about, which was that Formula One car, which was sold for $108,000 in May 2019. So once you buy a car, you kind of go, well, what are you going to use this car for? What is the utility for it? And in order to get a utility for it, you build a game. So they have built a game around Formula One, and in order to participate in the game, and basically be able to pay for the different NFTs, well, you need a payment token, and that's where the token comes in. And so that's Rev. And Sandbox, which Animoca is a majority owner of, where Global Ventures has also invested directly, is very much built on the lands that I tried to explain. So somewhere in December 2019, which was 6 months after the Formula One car, we had invested into Sandbox. And basically, they were explaining this, kind of second life concept, which those people that are my age maybe remember, which was about 20 years ago, that you can basically have, the real world in a digital world. And that's really what they wanted to establish. So what they did in December 2019 was that they sold the first pieces of land, virtual land, for $100,000 in a couple of days. For us, that was a huge success in those days. And then they sold for $200,000 in February 2020. And then came March 31st, which was really, as you remember, COVID more than 15 months ago. People were staying at home, and they sold for more than $450,000 in 4 hours. Boom. That was the breakthrough at that stage. We sold for $800,000 on NFTs in August. And then every single transaction of the land that we were selling, we would be using Ethereum. Now, at some stage, we were saying, well, we have such a strong user case that you can buy, this land and potentially sell the land. So why don't we also introduce our own payment currency, which is then called Sand token? We kicked out Ethereum and replaced it really with Sand. And as of September last year, that exists. So think about it, if you really want to explain it in the old-fashioned world, think about it as an eBay and a PayPal. eBay is, in this case, the game, and PayPal, in this case, is the payment mechanism. So it's basically a very strong, relationship between the two. And then the rest of the story for Sandbox, probably, they sold NFTs for $3 million in February this year. And then boom, 14th of April, they sold for $6 million in one day. So, and it keeps growing and growing and growing. And it's really making sure that you have true ownership in your game, that you can buy and also import assets from other areas. So I talked about Metakovan. I talked about, the the first guy who bought the Formula One car for $108,000, and now Beeple for 69.3 million. And basically, it answers the fundamental question on what do you do with one of those collectibles once you have bought it? What is the utility for it? That's the kind of answer that Sandbox is trying to give for everybody who's bought NFTs. You can build a basketball stadium, you can build an American football stadium, you can build a museum, you can actually discover music and rock concerts. You can do whatever you want and import the NFTs from anywhere in the world to Sandbox.
It's wonderful that you're talking about Metakovan, right? And his space is called Metaverse, that universe that he created. I just want to get to the mechanics of Animoca's business. So you have digital assets, you have digital token, you are a platform. The revenue feed, is it from the capital gains on the token, or is it from the gas fee, as they would call it, from the transactions?
There are very many revenue streams across the platform of Animoca. But to give you one example, I told you about all these virtual land. So, for instance, that example I gave to you when they sold for 800,000 in August last year, for 3 million in February this year, and almost 6 million in April. So that is basically generating revenue. Whenever you buy and sell that piece of land in the game, it's generating, depending on the game, some other 5 to 10% of revenue. So these would be two very important revenue streams that is recognized.
And the revenue is recognized in the forms of the token or the Sand token, right?
No, not in this case. The token itself is just, I would say, a payment mechanism that actually is facilitating all those transactions, right? So that's why the relationship is so close. What happens is exactly what you pointed out, that the more NFTs are being bought and sold in the marketplace, the demand for the token increases, which means actually that the token price potentially increases. So it's obviously linked to the activity, but I would still say it's like eBay, still eBay and PayPal. eBay, they have revenues there for whatever is being traded. And the more it's being traded on eBay, the more the demand for PayPal is there.
The eBay, PayPal analogy is so old-fashioned. We should just leave that. It's a totally new dimension. The token is both a store of value as well as a transaction device. And I think that people who don't understand this new universe just want to know whether it's monetizable. Ethereum is far more monetizable.
Yeah, so the difference would be that whatever you did with PayPal, right, you would never be able to sell that to somebody else. That's really why the financial systems have been kind of a little bit negative to a lot of these developments. Because really, those who should be adopting it and have started to adopt it is PayPal. You can actually accept Bitcoin. You can buy and sell a lot of stuff in the PayPal wallet. So that's really, I still think, that's when this starts to become big, when all those traditional players are also starting to be part of the ecosystem.
Yes. So the difference between PayPal and the token is that the token is the asset in itself, is an asset in itself. Is a transaction mechanism, and interestingly, it's also a potentially a technology in itself. There are things happening on the token front that are developing and growing. One interim question: what fear do you have as an investor that the NFT phenomenon is no different than an ICO, which came and then the regulators sort of pulled it down and put it in its place? It's still there, but it's not as big as it was when it first started. What sense do you have that NFT is not a passing phenomenon?
Well, I think you need to look at it. Did ICO solve any global problems? Can you name one?
Did ICO solve any global problems? It monetized. Well, it was an alternative capital raising mechanism.
Exactly. So it was a fundraising mechanism, right? So in itself, it might solve some fundraising potential problems for some startups, but it didn't solve any fundamental problems in the world. It was a way to finance your companies. So let's compare that to NFTs. Let's take one of the NFTs that we mentioned here, Formula One, as an example. So what is happening now during COVID-19 times? How do you maintain Formula One races when nobody can go to the stadiums? How do you maintain actually any revenues? How can you even pay, the drivers today if there is no sponsors, no audience, nobody's there? So I think why we've had such an enormous uptake in every single creative industry in NFTs is this enormous need for any creative industry to basically find extra revenues, commercial extra revenues. And that's basically what has happened. So basically you haven't been able to see your Formula One race, but here you have the opportunity to buy your own Formula One car and participate still, even if you can't watch it. And that's a phenomenal extra revenue stream for the F1 industry, and basically makes the whole F1 industry survive the COVID-19. Exactly the same analogies for NBA Top Shot and the basketball association there and the clubs. How can they pay the players if there is nobody in the stadium and there are no sponsors' money and no merchandise being sold? Again, NFTs come in there. You can own your own players. You can play in some of the games that are being produced, but you can already purchase them as a collectible. Same for music. You can't actually go to any music venues. Again, how are the music artists going to survive? So it's basically solving a huge problem for any creative industry right now, and especially during COVID-19. The main reason why the NFTs have exploded during the first quarter of 2021 is actually COVID-19. Now, you would argue that once COVID-19 is over, then maybe the need for NFTs is gonna be gone. You can have different views on it. If you believe that everybody's going to work as much out of office like they did, before COVID-19, well, I don't think so. Even if we get into a post-COVID-19 world with less infections, I think a lot of people will stay and work partly from home.
What do you think is the most likely scenario after the pandemic is over, as it tapers down?
I think the most likely scenario after the pandemic is that actually it's going to other areas, because we have only started to look at the NFTs in creative industries. We mentioned film, video, music, gaming, art, right? We haven't mentioned even non-profit organizations, what you can do with the Red Cross in terms of tangible assets that you get in exchange for your donations. I truly believe the more time we spend on digital, the stronger will the NFTs be. So my fundamental question here for every single banker who is listening to this is, who do you think is really accelerating digitalization? Is it your chief innovation officer? Is it your CEO? Or is it COVID-19? Those who have built, bank branches for Deutsche Bank in Europe, they know the answers. The Deutsche Bank branches are not there anymore. So I think this change is permanent and it will not be reciprocal. And the NFTs are exactly there. Wherever digital actually happens and is accelerated, the NFTs can be used in every single industry, not just the creative industries.
So the money that Animoca has raised, what is it going into? Is it to buy more assets, or is it to develop the technology further? Now, and also related to that, the token itself, I'm very curious about the fact that you have your own token instead of Ethereum. How much more work can be done on the token to create a utility element into it, or into them? You've got several tokens.
Before I answer that, just give you one last statistics. Today, we have between 700,000 and 800,000 NFT wallets in the world. We have 135 million crypto wallets. We have 5 billion users of creative industries. So this with the NFTs is really, really just the very start. Now, when we go back to your questions, which is basically saying, where is the money going to go for Animoca going forward? They have been very strong in doing acquisitions until now. And I think they are very, very good at turning around companies. So I think one of the main focus areas will be to basically do 100% acquisitions. They have loads in the pipe and will continue to do that. Of course, some of it will go to just purely organic growth, to develop further all the games that have been done, including marketing, and get the big masses of the 4 billion people to use it. So I would see this would be two proceeds of the proceeds of Animoca. I'm happy to talk to Animoca for ages, but then you should really go into an in-depth interview with Yatsu, who is the CEO and the founder of Animoca. What I can tell is just from an investment perspective, where Global Ventures has been there and supported Animoca. We believe as a fund that this space, which we call entertainment and gaming, is an area that we want to have a first move advantage, and we want to continue to invest in that area because we are actually very, very bullish about it, because as I mentioned before, we believe that this is bigger than internet and mobile. So we as a fund basically invest in 4 areas. One is entertainment and gaming, which is this NFT piece that we mentioned. Another piece is AI and blockchain. The third one is financial services and blockchain. And the fourth one is infrastructure and blockchain. So let me talk about the fourth one, which is infrastructure and blockchain, and relate that to what we talked about on Animoca. So when you do a transaction, which is pretty big, like the 69.3 million transaction of Beeple, there is still, to basically fuel this growth, we're going from 700 to 800,000 wallets to maybe the 135 crypto wallets or the 4 billion gamers that we have there. You need robust, basically, infrastructure so this actually really works smoothly, because there are still a lot of small problems out there in this ecosystem. One of them is very simple. When we do a transaction of 69.3 million cross-border, we need to know who is who, the KYC, the AML piece, and all that. So we believe that identity and basically global identity solutions that can actually fuel together the identity solutions in one country to another country, and basically making sure that we have the KYC and AML there, is going to be more important than ever, given this digitalized world and this cross-border payments world, which is exactly happening in NFTs. There is nothing more cross-border, I would argue, than actually NFTs. It's definitely not local. So the whole issue about getting digitalized identity is actually, I think the innovation from the NFT is going to push that area. We've been talking for so many years about that all these processes should be digitalized. I'm a true believer that areas like NFTs are going to push that at the forefront of innovation. And I'm very, very bullish about those areas.
On the technical front, I mean, I have many questions for Yetsu, including gaming as a platform, as opposed to sitting on HTTP or the World Wide Web. You actually create entire communities around yourself for the gaming platform to be a platform in its own right.
I think you're right there that the social element of the gaming platforms are extremely important, and that's why we got interested in all this, because we basically are all originally from the payments industry. And when we see that intersection between social and payments, that's when we get really excited as investors. So one of the main reasons why we invested was this passion for Formula One, for basketball, for a virtual world, for gamers. When there is such a strong passion and you have a payment mechanism linked to that, that's when it can become really, really big. So for us, this was like new WeChats, new PayPals, but in the completely digitalized blockchain world. And that was actually one of the main reasons why we invested originally.
If you have an exit, and actually that's a nice tie into the second part of our conversation, which is private markets, right? But just before we get into Forge, if you have an exit for a business like this, what would that exit be? I mean, I take it that you have no intention to exit it at any point in the near future, but what are the sort of reasons for exit, not mechanisms for exit, whether it's public markets or whatever, but it's more like for an investor to enter a very brand new platform like this. Well, when in the platform era, it was easy to see the exits. If you invested in Amazon or Grab, there are reasons why you enter any one of the series as they go up the line. And then you exit at some point where the technology is mature, the market share gets very clearly defined and all that. But for the gaming business, for the token business, what are the exit mechanisms?
We are still a blockchain equity fund, so we don't invest in tokens. When it comes to Animoca, we've been supporters there for a pretty long time. So we are invested in Animoca from Global Ventures 2, 3, and 4. So what that means is when you have a $1 billion valuation, you start to think if you are potentially, going to do just a traditional secondary and see if you want to sell what you originally invested. So basically just the standard thinking there. And given that this is such a big thing, which we believe is NFTs, we decided that Global Ventures 3 is not actually selling anything at this $1 billion valuation. Obviously not TGV4 because we recently invested. With TGV2, which has started in 2013, yes, we did sell, what we originally invested, which is overall peanuts compared to what we have. So we still believe, that is kind of an interesting part of, that we took some money back. But why didn't we take, more money back, like the initial investment from all four funds? Fundamentally, we believe that Animoca can become a $10 billion company, because the growth rate they've had in terms of revenue, they've gone 4 times revenue between 2018 and 19, 4 times between 2019 and 20, and 4 times now between 2020 and 21. So that is really hyper growth. And given that, we basically want to stay longer, and we believe that, this company could have a value of about $10 billion in the next 12 to 24 months. That's how fast it's growing. And that's how exciting this industry is from an exit point of view. And I do want to mention that, because it's a little bit of both a European and some parts in Asia, a sickness to actually take money, except for China maybe, to take home the initial investment and even exit too early. Because people haven't had, that much experience with actually unicorns. So people tend to say, okay, I did 3 times, 5 times, there is some liquidity, let's sell everything off. But what I've seen since Global Ventures is really a global partnership. We have European, we have Asian, we have American partners, right? And we all know the J curve. We start, with high expectations, then things go a little bit down. We don't reach expectations. 1 out of 10 actually go in the right way, but actually 9 out of 10 go a little bit down, and you start at J curve, and then you turn it and you start to scale it up. And wow, that's when most Europeans, especially, but also some Asians, want to sell. Whereas the Chinese and the Americans, they just want to ride it all the way through. And that's really what I can tell you about the exits, that I've been really had to, convince my partners not to sell too early. And I think that's really important for the ecosystem to have, some of these extra mega successes, because once you have them, you're more likely to invest heavily once you exit into new companies. And that's where Forge comes into place. So private companies tend to stay private longer and longer, as we all know. It's started to be a US phenomenon. Companies are now average private 10, 11, 12, 13, even 14 years. So people are impatient and want to have the exit earlier. And the only way to get it earlier has been basically a secondary sale, where a VC comes in, and normally they take a 30, 40, 50% discount on the latest round. And that happens basically every 2nd, 3rd, 4th year in a company's history. That's not really liquidity. So what Forge is really doing is basically matching the sellers that go through this J curve and the buyers who basically want to, buy cheaply, because there's loads of upside still there. Animoca is a perfect example. If you look at the names who invested in Animoca with Kingsway and many others, they believe that they're going to make 10 times now, whereas some of the sellers have maybe made 10 times. So it's a perfect match. And all those trades should really be, done in a professional way. And that's really what Forge is doing, providing that liquidity between buyers and sellers. And it started with Facebook, Twitter, and LinkedIn. As we all know, 10 years ago, they were the only so-called unicorns in those days. So the history started by trading Facebook, Twitter, LinkedIn. And then basically after that, there were a couple of years that there weren't that many unicorns. And many people said, this is not really an asset class. Facebook, Twitter, LinkedIn was a one-off. 3 big companies, it's never going to happen again. Now we have 400 companies that we have been trading in since inception of Forge Shares Post, and basically executed $9.1 billion of trades. Only in the last quarter, 700 million. So it's definitely an asset class that is there, and it's now worth about $2 trillion.
Now, just take us back on Forge a little bit. When was the company set up, and what is the funding right now? And you say 400 companies, $9 billion worth of trade so far. Now, it is effectively a private market, right? Is it, based somewhere? Does it have a concentration pool of investors in specific markets? Is it a Silicon Valley, oriented company, global Singapore-oriented company? Just give us a little bit more of the profile.
Yeah, so the history between Forge and Shares Post started in 2010 with Shares Post being founded in Silicon Valley. In those days, there was a competitor called Second Market, but they sold too early, exactly the J curve I explained. Equidata, as it was called, was founded in 2013, that later changed name into Forge. Forge Global today is a result of 2 early movers in Silicon Valley, one called Shares Post and one called Equidata. It would be very, very complementary for them to merge. Why? because actually at that stage, SharesPost had about 300,000 individuals accredited investors, whereas Forge had 50,000 mainly family offices as investors, about 350,000 investors. So if we were to merge these two pools of investors, which are completely complementary, it could become one unique marketplace with way more liquidity than we have seen ever. So that was basically the fundamentals why we agreed roughly a year ago to merge the two entities. And then the merger actually, after SEC approval and so on, only happened November 9th. And then after that, we basically raised money on the same valuation as November 2019. Obviously, the merger and approval took way longer than expected. So the overall fundraise is actually $150 million. It is a US company with the majority of its revenue still in the US, and with the majority of the companies being traded still in the US. But what this fundraising of $150 million actually brings to the table is, number one, the lead investors is Temasek, based out of here in Singapore, which we believe is going to open up, for Forge incredibly the whole of Asia and the whole of the world, because Temasek is investing everywhere. We hope that it will also give some extra benefit to Singapore itself, where I actually live, because the Singapore Stock Exchange has some liquidity, but not maybe that much for tech companies. So it could be a second liquidity venue also here. So it basically opens up really Asia for Forge. And also Deutsche Börse went into this round with 50 million, which is an existing investor. And that opens up Europe completely for the company. And lastly, we have also Wells Fargo, obviously, from the US. So we're very, very bullish about the internationalization of the platform.
Where does Forge play? The seed and then the series A, B, C, D, E, F, G, where is its sweet spot? Is it pre-IPO? If there is such a thing, or there is no intention for an IPO, but to keep the valuations in private hands?
Yeah, so if you were asked valuation-wise, it's somewhere between 250 million and 30 billion. So companies that are valued, within that range. It needs to be tech companies, and they need to be VC-backed. So I think that would be the three things that kind of really hold it completely together. And what you will see also, which is a COVID-19 phenomenon, the last 15 months, people have learned how to make investments through a Zoom call, not meeting the entrepreneurs, and actually doing it on documentation and data. So here again, the COVID-19 has been a huge accelerator. This quarter, as it says in the press release, they did 700 million of volume. And I think that it's actually 270% more than a year ago. So the growth is enormous. Like I said, it's not just because Forge is a fantastic company. It's just that the market is ready for this, for the same kind of fundamental reasons as we expressed.
Actually, just before Forge, there are any number of companies like Forge that want to be a marketplace for private capital. What is the critical success factor that creates the liquidity, that finally creates the momentum that it's able to run on its own? Because the initial phase is the difficult part. As you say, don't know when is the next thing coming. But now you start to see a flow, and then there comes a flow of investors as well.
Yeah. So I would
at which point does a company like Forge, make that breakthrough?
The really momentum breakthrough has been in the last 15 months, really. But what has been driving that? So if you look at it from a seller's point of view, if you have, invested in all these companies, you're going to go and try to sell your shares where there are buyers. You don't have to go to one shop. You can go to a couple of shops, and you're going to go and see where there is a bite. And if you have made 10 times, 20 times, or 30 times money, you're probably pretty happy to pay a substantial commission if you can get 10 to 20 times money. So you're basically looking for the best price, and you're not that incentivized actually on keeping the commission level low. You just want to make sure that somebody's buying for a high price. So from a seller's point of view, you really want to go where there are most buyers. And that's what Forge SharesPost has. But the second piece, on the buyer side, until recently, a lot of people have said, these valuations are crazy. They're so high. Why would I buy, in a company that I have so little information on? And that is actually what has fundamentally changed during the last 15 months. That given that we have $9.1 billion of trades, and we have data about those, and these are proprietary data points, we can almost like in a private Bloomberg show exactly the data points for every single transaction. For instance, Palantir, when it was private, the private markets more or less established the pricing of the direct listing, because that's the only data points that somebody would have doing a direct listing. So that is really fundamentally what has changed, that there is more proprietary data there and that there are more direct listings.
So there's better data points, and from there the resolution of the valuation is clearer.
Yeah.
How much of that is Forge itself involved in picking and choosing which companies it wants to support? Because you have one loser and everybody will talk about Forge, right? So what sort of due diligence is in place? What sort of guarantees? What does Forge do to make sure that every one of its investments creates a brand name around that, that if it's a Forge invested platform, it will be good?
Yeah, so it is a FINRA broker dealer and it is an ATS, but like in any FINRA broker dealer or any ATS, it's not an investment bank doing due diligence on the companies. So they're only facilitating trading. So that's not the role.
Okay, but it's been able to avoid adverse reactions or adverse deals that would have affected the brand of the company or of the platform.
Absolutely.
Right? So
the companies that you want to be traded there, that they are basically backed by top tier VCs, because the top tier VCs have done a proper due diligence. They're not responsible for due diligence, but that's basically how commercially you make sure that you have really good companies there.
Yeah, so therefore it's the investor community that validates the investment, and Forge is the platform. In the last 18 months, from after COVID started, the public markets have come back on. You mentioned Palantir. Palantir went public last year. So suddenly public markets are just as attractive as private markets, or so it seemed. Give me a sense of how you think the dynamics works between the two right now.
If you look in terms of the returns on the private markets, and you basically do two graphs. You do a graph and you see who entered on the public market and the returns they had, and you enter the same companies and you see what those that have invested early in the private markets and what kind of returns they've had. The picture is very clear that the returns on the private markets are way higher. And now, obviously, it should be, because there is less liquidity, there is more risk. So basically, the fundamentals work there really well. That hasn't always been the case. If you remember Facebook in 2013, a lot of investors went in on a too high valuation. The IPO came and it went straight down. And that could have almost killed the private markets, secondary private markets at that stage. It didn't, but there was quite a lot of trust lost for a year there. Now that's when you have three companies which are unicorns and one is too heavily a part of the overall total sum. Now when you have 400 and start to basically build the indexes of how all these 400 companies have gone, you start to have actually really strong data points. So for today, there is a no-brainer that the returns are higher in the private companies trade. Now, in order to buy in private companies, it's a different mindset than in the public, because again, there's way less information. Even if we have $9.1 billion of transactions and all that data, it's still way less than in the public markets. So the skill set for somebody buying in the second market is different on the buy side than in the public markets.
How is the culture of the skill sets expressed in different geographies? Chinese money, anything above 200 million, not a problem. You go to Southeast Asia, they tend to be so much smaller. US, again, it's West Coast, East Coast, it's different. How are the cultures in each of these different ecosystems represented on something like Forge?
Yeah, so I would say in general, in terms of institutional investors, there are way more secondary funds in the US, only specialized in buying private market shares. So that is really US phenomenon. Now, having said that, basically taking the risk, in the Middle East, in Hong Kong, in Singapore, in actually buying, a private company from a family office, for instance, is definitely there. And the willingness to do that is definitely there. So putting a bet on it outside of these secondary funds is very, very strong in Asia. And that's one of the reasons why Forge wants to expand, to Asia before Europe. Now, in China especially, the price discovery for private market shares has been very complicated. So whatever is being sold on the Chinese private markets, sometimes has been seen as, being pushed too much on the sales side and inflating, basically the price too high. So having a platform with a lot of more data points is actually very, very, very welcome. So it's kind of difficult to generalize, but I would say in China, the price discovery mechanisms of Forge are very, very interesting. And for the whole buy side in Asia, to get access to the absolutely most interesting US Silicon Valley companies is very, very interesting. So there we see some of the kind of short-term things that I think will happen in Asia in the next 12 months. China, no matter Forge or any other company, as you know, the model needs to be tweaked and needs to be really well personalized. So I think it's too early to say, that big vision, how it's going to work in China. All we can say is that without doing anything at all, we already have strong interest, basically just by word of mouth. And that we managed to trade some of the Chinese unicorns, both on the sell side and the buy side.
What is True Global Ventures investment in Forge? And you mentioned Temasek, you mentioned Wells Fargo, that's a bank. Other traditional banks or exchanges who are invested in Forge, just the profile of the investors themselves.
So that's the three main ones that I mentioned that came in this round. Forge is really big for us because we invested originally in SharesPost, which is part of the merge, way back in 2010. So we've invested in 2010, 2011, 2017, 2018, and now in March 2021. So we've actually invested 5 times into the company. So same there from an exit point of view, we were looking at, should True Ventures 1, 2, 3, or 4, exit anything of this. And in the end, obviously not 4 because we just invested. TGV3 has not exited anything. TGV2 hasn't exited anything. And TGV1, actually, some of our partners, because, they are coming out of age now, they've been with us for 10 years. We basically bought them out to basically stay on the cap table of Forge. We really believe that this is just the start of the beginning, even if we've been invested in the company for 10 years, for all the reasons we mentioned.
Amazing. Dusan, always great to catch up with you because I get an insight of what it feels like in the venture community. And the things that are making you excited, which are going to be redefining the industry. Now, what's interesting here is that you mentioned that you are, that the way True Global Ventures is invested is gaming, AI, FI, and infrastructure. Now, FI and blockchain, how's that different from infrastructure and blockchain? Give me some names in terms of traditional financial institutions that you're invested in, or is it traditional at all? FI and blockchain. Why do you have that category?
Both AI and infrastructure can go across verticals. The infrastructure can serve many different areas. Identity, to give the example, can be a wonderful solution for Forge, for instance, when they do more cross-border payments, as much as it can be a wonderful solution for the NFT trading that we were talking about. So clearly, it's an infrastructure play that can be helped in many different verticals. And sometimes, the competence of our investment committees, those who know financial services would also know infrastructure. But we have decided to give it a certain, a different angle because infrastructure in itself always takes longer in terms of building it up and growing it. So we believe that from a vertical point of view, that kind of patience is needed when you build up infrastructure, as opposed to, let's say, gaming, where you can see results quicker. So we wanted to have an investment committee of 10 people. We have only solid infrastructure competence so that they are actually patient enough when we build up those infrastructure companies. So that's mainly the reason.
Dusan, this conversation can go on. I'm going to be able to catch up with you in a short while when I see the NFT revolution work its way through. And I do want to speak to Yetsiu on the technology front, on the frontier of his business and the technology just taking him forward. So thank you very much.
Thank you very much. Take care, Emmanuel. Cheers. Bye.